moment because we've got Tim Ord on. Tim's been a great caller of the market in gold. So, Tim, how are you?
Good. Can you see my charts?
Well, I'm actually doing a bunch of things because I lost my sound in terms of the oral. I can the voice is coming through. So let me do this for 1 second. I'm going to get you on right there. Did I lose that? Okay, I've got the chart. I wanted the chart for myself. I'm showing it in the den, and I believe that our producer is going to show it as well. Tim, first of all, could you tell the audience exactly how they could reach you and what you do?
All right. I write a market letter. It comes out 4 days a week, Monday through Thursday. My website's www.ord-oracle.com. Last 4 years, we outperformed the market. Last couple of years, last year we were up 29%. The year before that, we're about 29%. And right now, that's about it for me. So I've been in the business a long time, started in business in 1977. But the market letter started in officially basically 89. So I've been at this for a while. And once in a while I even get it right. So let's go forward here. So since we got the charts, I guess, is that right?
Yes, we're all ready for you. So if you would like to start, just give us the positions that at least you're looking at the SPY right now, and if you want to just update us with any position you have, and then go ahead.
All right. This is the SPY. This is the weekly chart. Anyhow, what's happening here is April low was, in my opinion, a climatic low. That was just a huge volume down. So that's the exhaust move to the downside. We rallied back up above the previous lows of December and January, which came in around 575. That should have been resistance for if the market was going to continue back down. We actually broke through that resistance 3 weeks ago, and we closed above 575. So back up against that, inside that trading range, the trading range of December and January. So if the market can't hold below the previous lows, they'll attempt to take out the previous highs. Well, the previous highs is basically back into the December, January highs, and actually part of February, up around 610. And that's probably where we're heading. This whole pattern I think is forming here is probably a head and shoulders pattern. So ultimately we're going to rally back up, hit 610. We're probably not going to get through it the first time, and we may back off. But the whole thing is probably going to be a head and shoulders bottom, where the left shoulder took approximately 2.5 months. This right shoulder is going to take approximately about the same time. So that's what I'm kind of looking for in the bigger term. On a short-term basis here, this is a daily chart. We're up 6 days in a row going into last Monday. That predicts the market will be higher within 6 days. We're pretty much on target here. Doing that, we're actually about 7 days. But we're rallying up against that 610. We're in the process of doing it right now. And I don't think we're going to get 610 through it again on the first try, because I think we'll need to build cause for the next move higher. But 610 is going to be our target on this trade. We're actually long right now from about mid-May, and we're holding long, and we're seeing a little bit of panic in the trends today. So 610 is going to be a kind of a super area to watch real carefully if we how that performs once we get up there. But I think we're probably going to rally up and come back down to support around that 575 and take another try. And also, this is kind of it's not really the summer doldrums, but we're in the kind of the summer time frame. You usually don't get massive moves up or down in the summer. You get a lot of times trading ranges, and I think that's what's going to develop here. We're going to build cause, in other words, sideways market for a couple of months, maybe 3 months at most. Then probably sometime in August or September, we're going to start a rally that'll go into year end. But how big is the rally going to be? Well, chart 3 is a monthly chart. And if you can see, we went sideways here for actually 3 months, went sideways, broke down finally hit an April low, rally back inside the trading range. We're going to go back up to 610 area, and probably if you, I got a kind of a, oh, these lines right here are kind of cycle lines, and the next cycle is due in August, and that could be off a couple of weeks early or a couple of weeks late. But I think we're going to rally up probably into the July timeframe, come back down sometime in August. That's going to be a low. Then from there, we're going to head back up. But if you do the measurement on this potential head and shoulders bottom, if you take the head up to the neckline, the bottom of the head, I think it was 480. You take that up to 610, and you add that on to the neckline, you come up with around 740 on the SPY. I think that's where we're heading, either late this year or early next year. But over the next couple of months, I think it's mostly sideways. But the bigger trend's up. We have quite a few internal strength. We have the Zwag breast thrust indicator. We actually several different other indicators that did get a sign of strength off this rally from the April low up to where we are right now. So even though we can have consolidations, the bigger trend is up. I think the trade of this year is probably going to be wherever that next right shoulder bottom's going to be. I think the bottom's going to be right around that 570, 580 range, probably 575. It's just the timing of that trade. Is it going to be the second week of August or the first week of September or the last week of July? I don't know. That's something
so you do
got to
not
watch for.
Tim, you do not see very much of a pullback. That's not very much, 570 when we're at 589 right now.
All right. Yeah, I think this trend we got going right now, if we go back to chart 1, we're basically just going to head up to 610. So, especially we got panic in the trend today, and that usually precedes a rally. So, support is where the previous high is, which is right there, and the gap, I got a gap right here. So we hit the gap actually yesterday, this is a daily chart, actually last week, and we kind of popped off that support where that gap is. So I'm thinking we're just going to hit 610 between now and probably mid-June. The most favorable week, the sixth best favorable week of the year according to seasonality, starts May 24th, runs into June 5th, and we're right smack into that right now. So there's a good chance we could actually, on this favorable seasonality that runs into next week, pretty much all week, we could reach that 610 area. So I don't think we're going to pull back at all. I think the rally has started, and we're going to keep going to 610. So 610 is going to be right in that range, forming a right shoulder. So that's very impressive. But folks, hold on, because there's a lot more to come. We're going to take a break. We've got Tim Ward on the line. This is Basil Chapman sitting in for Jacob, and the Dow is up 87. The S&P's up 17. We'll be right back with Tim after this break. Hi, folks. We're back. Basil Chapman sitting in for Jacob. This is the Tom O'Brien Show, and we're on with Tim Ord. Fascinating work he's done. And Tim, I would like to continue. We just looked at the SPY. Can we go to the next chart? Just a quick review on this SPY. This is probably
sure.
Let me get my drawing tool out here again. This is probably the easiest to understand. This is a left shoulder from April until February. The right shoulder is going to start forming now. That may take into August to complete. This whole region right here was the head. So this is the right shoulder. And so it's going to be a choppy market probably for the next couple of months. But we're on a bicycle right now, and we think the next top will be around 610, which is basically the previous highs. And that's where we may be selling our position. Depends how everything works out, but that's what it looks like on a short-term basis. Then from there back down probably to 575. Then the next rally up, we'll think we'll break the new highs. But that's my perspective over the next couple of months, what may materialize. So that's my view on the SPY. Let's go to the gold market.
Good.
All right, so anyhow, the gold market, we've been out of this market since mid-April. GDX. Now, there's a lot of still gold stocks. The secondaries are starting to take control. We're noticing a lot of monthly charts. The Bollinger Bands are starting to turn up on the monthly charts on some of these small issues, and they're turning up with volume. So we're still in early stages of a bull market, but on an intermediate terms, or on a weekly scale, I guess we're looking for a consolidation here. This is GDX, and I think I pointed out is at times when the monthly chart for GDX closes 80% closes above the outer Bollinger Band, about 80% of the trading range. And if you can look right here, that period there, you can kind of see you close outside the upper Bollinger Band, outer Bollinger Band. You did it here, right there again. You did it here again. You can't quite see it very well. We closed out our position about 50 or 49.66, I think it is, and they're still in that vicinity. We're at when I made this chart 50.47. But if you notice, the RSI is still above 71. And previous times we got there in that vicinity, anyhow, the market was at kind of a multi-week high, if not longer. So we got two things going on here. You did get you got 80% above the outer Bollinger Band, and you got the monthly RSI above 70. So on a short-term basis, the market's just extended. So extended, and it needs consolidation. And we think there's a good pullback that may materialize here over the coming weeks back down to around 39.40 range, which is basically the previous highs. That's why we drove that trend line right there. And I think that's, you have a sign of strength through it, you come back down to it. And I think that's what's probably going to happen. But around the 39 range is probably our next buy signal. So that means like AEM, Newmont Mining, all the bigger gold stocks may consolidate, and probably some of the smaller issues are starting to rally or start to go to the forefront. So I think that's what's going to happen. The big ones, I guess the generals will take a rest where the soldiers are coming to the forefront. This next chart is the weekly chart. I do a lot of studies with volume here, and this April high, if you notice, as we're going up, there's a big day right there. That's the sign of strength day, this one right here. Then the next month, you got really a drop off in volume, and that's really a cue that the market's going to consolidate, which it has. Mid-April, we really haven't done anything since mid-April. We've pretty much just gone sideways here. But this rally we're having right now.
Tim, am I correct in saying that the volume with just 1 day to go for the month of May is about the lowest we've had since back in, where is that, since 2000, since January maybe, since December or January.
December of 2024, yeah, right here.
Yeah, right.
Or if you can, yeah. So yeah, so you're trying to, and this high did test the previous high of last month. So May tested April. Or no, this is a weekly chart. So this week's volume is going to be a heck of a lot lighter than last week's volume, even though we touched a high. And that's usually not a good sign. So volume's really extremely light. To get through the previous highs, which is around 50 in this range, you should have a sign of strength. Well, with volume of this week, you're not seeing the sign of strength. Volume is going to be, eyeballing maybe about half what it was last week. So you're not having a sign of strength through a previous high. So if you can't take out the previous high, that means you try to take out the previous low. The previous low is this low around 45. I think we're actually going to go lower down to 39, and we'll see if that turns out to be true. But I don't see the sign of strength through the upside here. We got 1 day to go. That's a good point. Here's a pattern that I think is forming here. It's 3 drives to the top pattern. And again, we got out in mid-April, pretty close to the highs, because the market really hadn't done anything since. It's kind of went down, came back up, went back down, and now, if you notice, today's volume is just bleak compared to what it was yesterday, and so we're not seeing a sign of strength above the previous highs of 51 here. That's what it's trying to get through. So it's probably going to fail. That means we're going to head down to this low, but I think ultimately we head down to that 39. 3 drives to the top pattern has a target down to where the pattern began, and in this case the pattern began around 30, 39. So I'm thinking that's the next buy area. That may change, but that's what it looks like right now, and time will tell. A lot of times the July period has highs and lows for the gold market, so we'll see how that develops. But we're kind of just keeping our powder dry, I guess, per se, and waiting for the next. See how, if we can't take out this high, I want to see how volume, if it increases to the downside, which is energy to the downside, that'd be quite a bit of information that indeed we are going to head lower. But again, the next chart will tell a lot too, and I'll come back.
We've got the break coming, so we'll have to wait for that next chart in anticipation. Folks, you're on with Tim Ord, Basil Chapman sitting in for Jacob, and we will be right back. The Dow is up 68, the S&P's up 13. We'll be right back after these messages. Folks, we're on with Tim Ord from the Oracle newsletter, and we are about to go to our next chart. Tim, where do you want to go?
All right, so we're back to this 3 drives to the top pattern. I think we're probably going to head down to 39. That may change, but this rally we're having here over the last few days doesn't really show the sign of strength, because we're setting at the previous highs here that we had back in early May. We're not seeing a sign of strength through those highs, so if we can't get through them, we're going to go back off. And how that decline performs as far as volume is concerned, where we get to 39 or not, will tell that story. So we'll have to wait and see. But I'm not a big bear here. The reason why is because of this chart. Now, this chart is on the daily prices, daily time frame, which is GDX daily. 3 drives to top pattern has downside target of 39. So on a short-term basis, over the next possibly several weeks, I think GDX will still consolidate. But the bigger trend is this is the monthly chart. The bottom window is the GDX monthly GDX cumulative up-down volume. Next one higher is the cumulative advanced decline, both on the monthly chart. I put a Bollinger Band on it. So these charts, this chart kind of goes up and down. I have pink and green tone to it. I put Bollinger Bands on both those indicators, and when you're above the mid Bollinger Band, you're an uptrend on GDX, which is the top window here, and if you're below the Bollinger Band, which is pink, you're in a downtrend for GDX, and that's the pink area. And we've been above, both indicators been above, in other words, advanced decline cumulative and an up-down volume cumulative. So that pretty much technically is the market for GDX. It follows the advanced decline and follows the up-down volume. So it's a powerful indicator to determine which way GDX is going. And as both those indicators are rising, that means GDX should be rising, which it does. So we got basically both indicators closed above the mid-Bollinger Band back in early 2024. And we've been on a buy signal, I guess. Yeah, it's a buy signal. Since both indicators are above the mid-Bollinger Band, GDX in general should move higher. So this is a monthly chart. It doesn't try to catch every wiggle in the market. It just kept you in the big trend. So the last signal came in 2021. It looks like about January. Both indicators fell below the Bollinger Band, and you had a downtrend all the way into January of 2024, which is 3 years of downtrend. Now you got an uptrend. We've been in it for a year now, and so far, the up-down volume and advanced decline indicators are both making higher highs, suggesting internals, in other words, advanced decline is making higher highs, up-down volume is making higher highs, showing that more up volume is going in compared to down volume, well, that's a bull market. So even though we may stall here on a weekly basis, the monthly charts have no sign of a top of any being close here. So can we rally for another 3-4 years? Maybe, you don't know. We'll rally until both those indicators fall below the mid-Bollinger Band. And I don't know when that'll be. I do have some cycle work that comes out in 2027, which is, a good year and a half away or thereabouts. And so maybe then, I don't know, but as it sits right now, the bigger trend's up. My point is, this is GDX top window here. If the market does fall back to around 39, which is where that trend line is right here, that would be a great place to buy, especially when the monthly charts remain on a buy signal. So that's we're out of the market, so we got out around 50. We're hoping to get it back in around 39 and ride to the next higher high. How high is high, don't know. But this market's still building momentum to the upside, so it could be a while. Again, if the market does pull back here in GDX, which we think it will, that'll only be imply that the generals will pull back, not the soldiers, I guess, or the lieutenants or whatever. I think those stocks are starting to perform to the upside. Some of the very small gold and silver stocks, especially some silver stocks, have just had a really nice move over the last week. Yeah, that's going to probably
continue.
Silver hasn't
done very much.
Silver is actually cheap compared to gold. That I don't have that ratio in front of me, but silver stocks are probably the better buy right now compared to gold stocks. But both of them will do fine. If they give buy signals, I'd take them. But again, AEM, Newmont Mining, some of the major ones, maybe pull back some here. But it's a pullback in an uptrend. That's the reason why I wanted to show this chart, even though I've been saying since mid-April that we'll probably see consolidation. Internals of GDX actually still looks strong here. This is just a pullback in an uptrend, so this is not a top of any consequence. It's just 50 range, probably a high, 39 range is probably a low. You should be along around that 39-40 range, and back up to higher highs. So I think this bull market is got at least another year, maybe 2 or 3 more years to go. I think we're going to be rallying for a while. And the best part's still in front of us, because a lot of these charts on the monthly time frames on these small ones are just turning up over the last couple of months, and they're just starting to perform. And once the monthly charts turn up.
Before we wrap it up, because we got about a minute or two left, is there anything that that we haven't got to that you would like to get to? Or I would like for you to be able to complete all your thoughts.
No, it's just pretty much it. This is all my charts, so unless you got specific questions, we can go back to them. But this is it.
The only question I had is that gold itself, I'm showing my chart now with the daily, weekly, and monthly, has kind of stalled. All my technicals are still very strong, and we actually, for subscribers, we've been long for quite some time, the PHYS, the physical gold. But this is very interesting because the technicals haven't really shown any weakness, and yet at the same time I always look at gold as a geopolitical economic insurance policy, and if there's some kind of appeasement around in different places in the world, I'm just wondering how gold will hold up. So far it's holding very well.
Yeah, I think it's more inflationary. I think inflation started. It's not. I think they're going to have to fight this inflation for the next, couple 3 years. It's still going to pop its ugly head. Momentum's the name of the game. Inflation started. It just, even though the government's trying to put a wet blanket over it, it's still going to be popping up, and I think it's going to be hard to manage as we go forward here. I think obviously we'll get it under control at some point, but I don't think that some point is very soon. I think it's I think it's 2027 might be where it gets tamed. I don't know, but there's a lot of similarities between now and the 2000 bull market for gold and gold stocks, and that bull market ran for almost almost 12 years. So we'll see how that turns out. But
well, from your
don't know.
words to Gold's ears. Thank you so much, Tim, folks. Check out Tim Ord Oracle, and it's wonderful to be able to speak to you, and you will be back on Tuesday, right?
Right. See you then.
Thank you very much, Tim. Have a good weekend. And folks, we'll be back. Basil Chapman here. We'll be back. Dow's up 143. S&P's up 26. We'll be right back after these messages.